how's it going today? Welcome to the Closing Beat. I'm Dustin Tibbetts, financial advisor here with Jazz Wealth Managers, and this is just our quick update that we do on the stock market to let you know the good, the bad, and the ugly about the markets. So we're going to dive in and cover this. If you're brand new watching us for the first time, well, you've joined at an interesting time. May through October tends to be the roughest 6-month stretch of the markets. I've said that quite a bit. I think I'll stop saying that for now. And so far, May is on track for being one of the worst Mays here, going back now about 42 years. So, yeah, a little bit of a rough start there. Now, the markets today were higher. You see the Dow added 116. You got 16 on the S&P, and you got 87, almost an identical gain for the Nasdaq, 87 points, 1.14%, I believe, yesterday. Now, we're going to cover a few things here, right? Remember we said that this week is the worst week for the markets out of all the other weeks, right? If you were to go back 10 years or 25 years, you find that this week, compared to all the other weeks, is the worst performer. But remember, I'm not the kind of guy that says, I told you so, right? I like to tell you ahead of time. So remember, we started by saying this is the worst week. We said this on Monday, that this is the worst week on record, right? So we have some problems. However, the best performers in this week are the Nasdaq, the QQQ, and the XLK, your tech stocks, right? So we kind of mentioned that already, that, hey, these stocks have already pulled back. What's going on today? Take a look at that screen over there. You see the Dow up by about 0.5%. You see the S&P up about, let's call it 0.5%, and the Nasdaq outpacing. All the excitement today in terms of volume was in the Nasdaq there. So just remember these stats. This is not just so I can show all the stuff that all those screens do back there. This is because the people that work with advisors that have higher net worths, right? If you are a wealthy person, you work with an advisor that's already helping you with this stuff. And that always pissed me off about this industry, how the average person couldn't get the same help. So this sort of thing we share with our customers all the time. Every month I do an update, and I do an incredible job just going through all the different geeky stats so you get to know that. Whether you have $5,000 in your account or $500,000, doesn't matter. You should have access to the same thing. At least that's what I believe here. So there you go. That's sort of just following up on the stats. I do that with our customers. I share stats with them. The next month we come back and we go, look how it played out. I can't wait to do this month's update, by the way, because there's so much going on. Anyways, let's take a look at the charts here. We'll go through that and take a look. S&P today, you can see it, a little bit higher today, still stuck under the 50-day moving average. I'm still hesitant with this rally. I think, like I said yesterday, the sell-off into the close, and today that's great. It was a good day, but still just felt like lower volume, lack of energy. It felt like the bulls were sort of being pulled along rather than wanting to be the first to dive in, and that's probably the best way I could say it there. So S&P there, not too bad, but just a small gain on the day. The Nasdaq, like I said, today was mostly a tech-led area of the market. You now know, if you've seen Monday's show, you know that this is supposed to happen. This is the sort of average results of the Nasdaq for this week of the year. By the way, the average gains for the QQQ comes in at almost exactly 1%, 1.01%, and the XLK, by the way, average gains of about 0.8%. So it's not like you're missing out on anything. It's just nice to know that it's there. If we go through the individual sectors there, you can see XLK, one of the better performers here today, just recovering after the pullback. This is just a little discount. You know, I tease you about saying, don't freak out when the markets drop. Get excited about a discount. Really, that's all you're seeing on the screen there is people going, all right, I see the pullback there. There's other people out there that view this as a discount, and I think that's okay. So that was one of the more heavier bought areas today. Communication services, same thing. That's your best performer on the day. We'll go through that. That's Alphabet and Facebook helping support that one here. But doing well, consumer, that was one of the more stronger areas today. And semiconductors, also tech-based, of course, towards the top of the pack. So very quickly you can see, all right, most of the excitement was in tech today. Everything else was okay, but not super exciting. And so that's what you have. Actually, did a little research here. Half of the stocks that were up 2% or more today were tech stocks. So out of all the stocks that gained 2+%, half of them were tech stocks. 70% of all the stocks that gained 3% or more today were tech stocks. So it gives you an idea of, well, a lot of tech stocks doing well today, right? So not a full-blown market rally where everything is moving together and everybody's excited at the same time. Look, you had a lot of other sectors today that were higher. You had consumer staples. They were higher today, doing well just on lighter volume. You had consumer discretionary also higher, did well just on lighter volume, nothing to get excited about there. Industrials really struggling to try to bounce off this support area here. It did well today. It was a green day, but it was just one of those lackluster, sort of low volume, I don't want to go to school, mom kind of days, right? So that's what you see there. 2,800 on the S&P. That's still the big focus. 280 on the SPY if you're watching. That's the big support area that everybody's looking at. If we break below that, you basically see the news channels change their content back to red, and everything would look a little bit scary there. One other little bit of bad news is probably the Russell 2000 just not participating, man. It's just, for all year long, we've been kind of picking on the Russell, saying, come on, do a little something. It still refuses to participate. Here's yet another day where the market sort of did what did, it was green. It was a good day. You could tell I'm not all that excited, but it was a positive day, and the Russell just seemed to not want to participate the whole time there. If I dig through the communication services real quick, you got Facebook higher on the day. Let's see, where did that finish? Facebook ended up with a 3% gain on the day, bouncing right off the 50-day moving average, and you had Alphabet with a 4% gain on the day. Those two stocks make up just over 40% of the XLC, so it's very easy to see that if those two stocks do well, then the sector itself is going to do well. Disney is, I believe, the third largest holding in there, which is kind of funny. Disney was up 1% today because of the deal they struck with Comcast. And if you dig a little bit deeper, Comcast is the fourth. No, it'll be the fifth thanks to the two classes of shares of Google, but it's the fourth largest. And so basically you had a recipe for those largest holdings in the XLC to help push the markets higher today. Comcast didn't participate there, but anyways, that's what you have out of that category. Retail continues to be weak, just not participating. Retail getting a lot of the focus, of course, because, well, there's a new sneaker or possible sneaker tariff coming out there, but that was just the highlighted area. There's some other things in there as well. So retail just refuses to participate. You had, I don't know if you saw Macy's today, by the way. I'm not going to probably talk about this one. Macy's actually shot higher to start. They had earnings come out, better than expected earnings. But then they started talking about tariffs in their conference call and putting out their press releases on that. And all of a sudden, the stock started falling back down. Poor Macy's just can't catch a break there. But new lows list today, you got, that's not it, JWN. Nordstrom's hitting new 52-week lows, losing 1.5% on the day. I believe Urban Outfitters, learn to type, buddy. Urban Outfitters poking a new lows there as well. So handful of retail names that have already been weak. It's nothing new, right? Nothing to panic about there, but there's already been weak stocks that as the market gets weak, where are people going? They're going to short those weak stocks if you're an active trader. So just want to point that out. REITs, no matter how you want to look at it, they're almost back to highs there. I believe some of the ETFs did actually even poke to new highs, so I thought that was interesting. And then I'll just wrap up with the XLV, that's healthcare. Just a really interesting pinch. I forget what it's called. I don't follow much of this anymore, but I forget. You got this sort of downtrend going on there, and then you've got this uptrend pinching along the way, right? So I can't quite get the line exactly to the corner there. But you see what's going on there. Price is being sort of pinched in a little bit of a wedge. We always bring this up when we see things like that. When it breaks above or below that area, that's where people make major decisions. So I thought that was kind of interesting on healthcare there. I'll leave those there and we'll follow up with that just to see how things go. In the news today, Alibaba. We were talking about this one from yesterday. They reported earnings today. Holy cow. So Alibaba's like Amazon-style growth here back in the day. They beat on earnings. Revenue grew 51% compared to last year. Huge increase there. And look, there were some retail sales numbers that came out of the U.S. and came out of China, and Alibaba got the pass today, meaning nobody cared about those bad numbers out of China. Just Alibaba's killing it, man. They're just showing how even though retail may be slowing down in China, these guys are taking more and more and more market share over there. So incredible. And then their cloud services business grew by 76%. I mean, that's the kind of growth and activity you see in China. I saw something the other day, like 541 new millionaires are created in China every day so far this year. Whoa, right? That's pretty cool. Tilray. So Tilray basically ended the day pretty much flat. After all that excitement, it was just basically flat. The company, they lost more than expected. It was only just a couple cents. It wasn't that big of a deal. Everybody was expecting a loss anyways. Revenue beat by $3 million, but valuation's the key here. This stock hasn't done a whole lot of anything because valuation. There you go. Zoom out as far as we can back to the IPO. Valuation, man. They maybe they'll make $100 million this year or have $100 million in sales, and they're supposedly worth $4 billion. That's tough. I don't discount the potential in the industry, but $4 billion on a company that maybe makes $100 million and loses money at the end of the year, that's a tough one. Aurora Cannabis added 3.5% on the day. They beat on earnings. They lost 5 cents on earnings, but revenue was also better. Both of these companies are doing well in Canada. Recreational marijuana use, of course, legal in Canada, and as that's come out, these companies have been really positioned well to take advantage of that. So it's a slow growth over there, but and a lot of competition, by the way. But so far, not too bad. A little uptick there. For them. Restaurant Brands International, these are your, this is Burger King, Tim Hortons, Popeyes, and Louisiana something or other. We don't have any by us here. Louisiana chicken or something. Anyways, the stock poked to new highs today, mostly on the news that they were going to work with Beyond Meats. Now, this is an interesting story because everybody focused on this story. Beyond Meats even gained almost 10% on the day. But Restaurant Brands is going to be testing Beyond Meats fake burger, or whatever you call it, plant-based burger in the Tim Hortons stores up in Canada. Here's the thing, though. They're already doing this. So the media chose to focus on this thing, but Restaurant Brands is already testing the Impossible Burger. So there's two players in the space. You got Beyond Meats, and then you got Impossible Burger, but Beyond Meats is now public. So they've been testing this at Burger King. If you look at all the tests that they've done between Beyond Meats and Impossible wins hands down every single time they beat Beyond Meats. So I don't know that those are skewed studies or whatever. I just like keeping track of that stuff. Anyways, they're testing the Impossible Whopper burger or something in Burger King, and apparently it's doing all right. It's about $1 more if you want to go test it out. Compared to the regular whatever's in the Burger King meat burgers. Not to pick on them. Also, Alphabet, we talked about that one being strong today. They were upgraded by Deutsche Bank. What was the thing there? Price target now 1,400 versus 1,300. That puts it back over new highs. So essentially that analyst is saying, hey, Alphabet will basically go from here, make new highs, and then head to 1,400, whereas before they were thinking it would just move back to highs. So I don't know if you care about that. And I have to put in the class. Berkshire Hathaway, this will kind of come out tomorrow, of course, but 483,300 shares of Amazon. So I believe Amazon's up a couple ticks here after hours. That's how many shares they bought. Not Warren Buffett. It wasn't his decision, but 483,300 shares. Can you believe that? That's about $905 million that they bet on this stock. Sweet. Sweet. All right, other news. Let's see. What did I have left over on my list here? Zillow had a good day, 4.5% on the day. Guggenheim upgraded them. They were focused on what we were talking about yesterday, their offer business, where you can buy and sell your home on there. And so they're very positive about that. We talked about Alibaba. JD.com, by the way, upgraded today. That was one of the upgrades on the list. So they had their... the company the analysts that upgraded them, by the way, it was Nomura. I can never say the name. Nomura. They said expanding profit margins is what they expect there, so higher revenues overall. And Boeing, by the way, is a lot of little individual news here. The FAA said that there's supposedly going to be a software fix that they'll be submitting to them within the next week or so, and that is the quote, the next week or so. So we'll see what happens there. That's pretty much all I have for you. I like to report the dividends to you. There's a bunch of them. If you're one of our customers, we got $1.45 coming our way for Amgen, Whirlpool $1.20, CVX $1.19, Sherwin-Williams $1.13, Duke Energy 93 cents, and United Technologies 74 cents. Smuckers is in there as well. We don't own that one at the moment, but 85 cents in dividends. At least today is the X date, so each one of them have a different pay date. I just like to point that out. Tomorrow, economic news is going to be a big deal. Now, today we had retail sales, by the way. I point this out in our monthly update for customers. Bars and restaurants continue to do well. 4 straight quarters in a row that bars and restaurants have done well. Gas stations, okay, we get that. Food and beverage did well. I actually thought one thing that stuck out was sporting goods. Sporting goods was at the bottom of the list. Small uptick in sporting goods spending there here in the U.S. Tomorrow's news that will drive the markets in the morning. Housing starts and Philly Fed. That's a big one that'll come out there. What are we expecting there? Well, I don't have it exactly. Philly Fed, initial claims and continuing claims. Really, housing is the morning's activity from building permits to new housing starts. So we'll take a look at that. Of course, if you have any questions, I'm happy to try to answer them for you if I can, and then we'll move on from there. Let's see here. So questions on will Intel be further damaged by the trade war at all? Do got a lot of revenues that come from over there. So far, you could see between earnings and this here, it seems that everybody's pretty much priced it in around the 45 level. We'll see. I don't think Mr. Trump is done picking on them over there. I hope it doesn't become like we're going to take down China sort of conversation. I don't think that's very smart, but we'll see. Yep. How does delaying well, the fact that they're just delaying them means that they may not even happen at all. So that's very helpful to the automakers that have both plants here and in China or Asia in general. So very helpful overall. And if you look at the auto sales, the last auto sales numbers that came out, that was already starting to weigh on that industry, especially in the luxury side of things. So could be a big deal. That's one where I think they just leave it alone and we start focusing elsewhere. Seems like that's maybe a negotiating tactic right there, so I'm okay with that. Yep. How worse will the next recession and how long will it last in your opinion? Why does it have to be worse? Why can't it just be a normal recession? Nothing wrong with that. Markets go up, they take a break, then they reset. I don't think it has to be a worse recession. I did tweet out about the auto defaults. Auto loan defaults, meaning 90 days or later that people are late on their payments, that just hit the highest level since 2008 or 2009 during the whole financial crisis. I don't know if that's some sort of hint or whatever. Student loans, that all kind of remains pretty steady. Everything else is pretty much fine. Credit cards are a little bit nasty in there, but not as bad as they've been. So I don't know. Mild recessions, ones that don't stay in people's memories. Well, from an economic standpoint, I don't know if there's many recessions that people don't remember. So if you're talking about market pullbacks, these things come and go. Recessions-wise, we're nowhere near it. We're at least 6 months away if you use the sort of traditional method of identifying that. So I don't see anything wrong with the market just adjusting to higher rates and possibly a new president if that happens. I don't think that's a big deal, especially overall in the economy. I don't see a reason why the economy can't just adjust to, well, the half dozen things that we're battling through right now and sort of reset. Stock market reset, economy reset, everything take a break. It doesn't have to be boom and bust. And I think that's what a lot of people remember. We remember 2008, big boom and bust, but there's lots of little pullbacks along the way. So, yeah, that's it. Housing delinquencies are nowhere near the top of the radar there. Everything is fine as far as that goes. Still near lows, by the way. And we track not only that, but we also track the number of loans being offered to different credit scores and everything. Everything's in check right there. The housing market, as far as mortgage originations, has not gotten out of control. That's like they're still being sort of careful about who they put out mortgages to. So housing delinquencies are still very much near lows, if not hitting lows at this moment. I'll probably share that with customers in our portfolio update. That's something new that we're tracking here, so I like showing off new stuff. Yep. Will AT&T pop in the future? AT&T is more slow and steady, even with the best of news. I'll tell you what I do like about them is that they're trying to pay off that debt super fast. That's that's an interesting study right there. I think that helps them in the long run, but they got till the end of the year until they're trying to pay that off anyways. So, and that's not saying that they will, but if they happen to, I think that is that's more attractive than saying, hey, is this a good price here? They can get their debt paid off. Now you got margins. Everybody else going to be complaining about tightening margins, the economy tightening, and AT&T might be able to say, we got our debts paid off. We have wider margins just because of that. Where do I get what data? What did I show? So what we do basically is just as we grow, we just keep accumulating more data and more interesting ways to keep it. The goal being to eventually maybe share that with customers and have it inside where you guys could research and do all these, whatever you're interested in looking up. It's a long process right now. We're just testing out different ways to go about it. So you can buy data. I mean, you could buy like every single tick of a stock, every single tick of the S&P. You can buy really any single historical report of any data point, housing starts if you want. It's not cheap, but you can buy all that and then you'll have all the information and you can compile it as you like. Yeah. What do you think about Planet Fitness? I don't really have any comments on that one. I don't actually follow it. In the public space, right, as far as companies that are publicly traded, there's not a whole lot of competition. I get what they're doing there. It's just not an interesting company to me. I think it's too tough. Yeah. I saw what Mr. Bannon said today. I don't like that. I don't like that approach. I think that so far Trump has been pretty good at saying we want China to pay their fair share, right? And that sort of is a conversation that the President Xi can go back and sell to his people. You can work together. But to say you're going to come after a country and make them pay from a more aggressive stance, I don't know how much you guys know about the Chinese people, but I spent some time teaching probably well over 10,000 of them. You don't mess with their sort of nationalism. I mean, it's the same in the States, right? Somebody drops the flag, that person's going down, right? Disrespect the flag, you're going down. It's like that in China. You can't pick on them. You have to just work out a deal. I think it has to be more of a friendly conversation, which Trump's done a good job of so far. I don't like what Steve Bannon said. How often does the housing market crash? How would you define a crash? That would probably be the first question. Yeah, dividends are good on AT&T. Yep. What's your favorite investing book? I'm not a book guy. I've got a bunch of them on the shelf here. On a couple different shelves. I'm a data guy. I just want to look at the numbers. I want to look at history. I want to look to see how the numbers, do they correlate to the future? Do they work out going forward? I'm not so much interested in opinions or motivation. That's why I don't do a whole lot of motivational videos. I just want to share, like, what's the information? Give me the raw numbers. Let's see what happens. I get that some people disagree with the variables. That's okay. But I'm not too much of a book guy. I'll read anything that comes out, but I don't have a favorite book in that category. Maybe one day I'll just pull all those books down and they're not all investment related, by the way, but pull them down and just share why did I pick them. I don't know if that's all that interesting, but we'll check it out. Okay, I'm done. Yeah, you're right. The Chinese are very, very proud people. They should be. Okay, so that's all I have for you here today. I hope you enjoy. We'll be back we're going to do this again tomorrow. Also, our class for customers tomorrow, we're going to talk about sort of overvalued versus overpriced. How do you determine the difference? What are some of the comments you see on TV? What does it mean? How do you define it? We'll keep it really simple, of course, and really quick for you guys. That'll be tomorrow night, 8 o'clock for our customers. I appreciate it. If I helped you in some way, maybe you'll hit the subscribe button. That's all I asked for today, and enjoy. We'll be back tomorrow. Adios.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.